Well, the markets and the global cues bear down on Indian equity markets as Indian volatility index surges and weakness persists in Reliance Capital and Jindal Steel and Power. Traders initiate fresh short positions in their respective short futures. And the rupee weakens for the second straight day to trade near its 5-month low. Bond yields spike. And metal stocks bear brunt after global metal snaps the 4-day gaining streaks.
Well, clearly it's turning out to be a weak session of trade. Nifty's breached yesterday's low level of also 10,058. The key level to be watched out today will be the 20-day moving average on Nifty, which is closer to 9995. Currently, Nifty trading lower with almost 0.8%, down about 90 points. The volatility is on the higher side as India VIX once again has surged above that mark of 12, currently trading with gains of almost 6.5%. Even for the Bank Nifty, it is weak, and actually Bank Nifty so far in the last few sessions has been a laggard. And don't forget, the financials have a heavy weightage on Nifty of almost 30 to 35%. So probably that could be one reason why the Nifty is also trading in a very weak territory, because Bank Nifty is down. You've got the private and the PSU banking space also doing terribly bad in today's session. But have a look at the 10,100 call strike. That's been very active since yesterday. It added almost 10 lakh shares, and yesterday's closing premium was almost 76. Look at that now. Again, there has been some sort of open interest addition in that range of 10 to 11 lakh shares, and the premium too has contracted. So clearly, call writers who wrote that call yesterday are very much in the money, and as the premium too has contracted there. But have a look at on the put side, 10,000 is very key for this market, because once again we've seen a lot of put addition coming about today, and the range yesterday for on the downside shifted to 9,900 from that 10,000 mark. Even for the Bank Nifty, Agam, the range has widened after yesterday's expiry. If you look at the maximum open interest concentration now, it is at the 25,000 call and the 24,000 put. So probably 1,000 is the range that we are working for Bank Nifty.
Right, and amid this weakness, let's also take a look at some of these futures which are looking at a substantial increase and an open interest. And there are quite a few stocks out there. Starting off with Reliance Capital, of course, so there has been about near 6% increase there. Havells India, and along with several other stocks, are also looking at a considerable increase as far as this open interest is concerned. Seat, Apollo Tyres and Bajaj Finance, among others. In terms of stocks which are looking at unwinding in their open interest, we are looking at a fall in the likes of Wockhardt, IGL, Torrent Pharma and NBCC among the others, which are looking at some amount of unwinding. But we've just had the listing of Reliance Home Finance. We also have Shraddha joining us to tell us about the valuations and how the listing has been. Hi Shraddha, thanks for joining us. Tell us what are you making of this listing?
Yes, of course, the issue actually, it opened at 109 rupees on the Bombay Stock Exchange. That is significantly lower than 115 to 137, listing price that analysts had expected. So that brings the market capitalization of Reliance Capital to about 5,300 crores. It also makes the valuation a lot more reasonable, because at 109, the price to book value at the book value per share of rupees 40 turns up to about 2.8 times. Now let's have a look at how it compares to some of the peer group companies. Canfin Homes trades at about 5 times its price to book, PNB Housing Finance at 4.4, and on the lower end you have something like a LIC Housing and Diwan Housing Finance, which trade at 2.6 and 2.1 times their price to book. So broadly you have housing finance companies which are trading in the 2.5 to 5 times price to book value range or band. So at 2.8 times, Reliance Home Finance does look attractive, especially given the kind of growth that the stock is expected to see. If you look at the AUM growth trends over the past few years, over FY14 to FY17, Reliance Capital's AUM or loan book has grown at over a 40% CAGR, and in fact the management is targeting to reach a loan book size of 50,000 crores over the next 3 to 5 years versus the current 13,000 crore number, which means that the 40% sort of plus sort of a CAGR will continue. But having said that, a slight disappointing in comparison to what analysts were expecting, and on the back of that, we're also seeing some rub-off effect coming on Reliance Capital, which has dropped about 3.5% or so.
Well, it's interesting that you said that there has been a rub-off effect on Reliance Capital, and that's exactly what I want to talk about right now, because Reliance Capital is seeing a substantial increase in its open interest. Now, over the last 5 sessions, not only have we seen fresh shorts accumulate, we've also seen the open interest go up substantially. And we are looking at a result of that. Of course, while the stock is correcting by as much as 4%, its open interest once again has surged with fresh shorts building in. And well, we're going to also take our experts' advice on what's going to happen with Reliance Capital. But on the whole, the stock certainly looking weak among many others in the mid-cap arena.
Well, clearly, Agam, Reliance Capital still holds about 51% stake, and as Shraddha was mentioning, it's listed at almost 2.8 times its price to book, and whereas if you look at the average mean for this industry is about around those levels of 2.5 to 3. A tepid listing because the market was expecting it to list at around levels of 120. But let's go across to our guest and welcome them. Joining us today on the F&O Show is Amit Gupta, Head of Derivatives at ICICI Direct, and joining us right here in the studio is Navneet Daga of IIFL Wealth. Good morning to you, gentlemen. Thanks very much for joining us. Navneet, coming to you first, and just want to get a check. Last 2 days, the volatility has been actually fluctuating. Yesterday, India VIX was up 4%. Towards the end, it was just about flattish. But today, once again, it's had a huge surge of almost trading at levels of 12.5. Do you think Nifty can breach the mark of 10,000 till the expiry now?
Well, only 4 days left before the expiry. It would be a touch and go kind of a thing. But we certainly believe the kind of the call rating that we have seen from today's session, 10,000, 10,100, 10,200. All the strike have added a significant open interest, and that makes me believe that basically, at least on the upside would be capped on this market. Downside breach would likely to happen only if he started to the 10,000 put writers started to get a bit more panicking about the situation. But that's looking unlikely at this point of time because the global cues are not off the cliff. But it's looking likely that 10,000 levels might be touched in this expiry. But making a decisive move below that, it's not looking very unlikely to me.
Hi, Amit. Thanks for joining us. Predictably, we are looking at a lot of writing in the 10,100 call. What is the direction of the Nifty that you foresee as we move into expiry next week?
See, I think we are in a proper consolidation around 10,000 levels now. We have already seen 300 points of correction below 10,000 levels. Now, there may be a scenario near expiry. We may see 50 points or 70 points lower move below 10,000 levels. Now, overall, the rupee depreciation is what putting problem in the market, because so far we were in a very clear rupee appreciation trend. But in the last 2 sessions, from 64, it has moved beyond 65. So that is what the problem is. So 65.3, I think, is a very crucial resistance for USD INR. So if that starts reverting from there on the lower side, Nifty also will find support around 10,000 levels again. So that is what the major problem is right now. So volatility, as you said, I think it is not likely to, see any kind of breakout, because that has been the trend we are in. Whenever vols goes to 13% or 14%, we see the option writers start very active in the market, and I think still that particular scenario is very much on. So from 11.5, if it goes to 12.5, I think those kind of traders will again come in and they will start writing the options, and that is where the markets will consolidate. So we are in a proper consolidation around 10,000 levels. Again, after few sessions, once markets get stable amid the positive global news flows, again the stock specific kind of scenario will come in.
All right, so what Amit is suggesting, that there is some consolidation which is taking place around those 10,000 levels. And just want to correct something here. When we started the show, 10,000 put was adding some open interest, but now actually there has been some intraday unwinding there, as a lot of put strikes are seeing unwinding from the likes of 10,050, 10,100 and also 10,200. This was the same trend yesterday, because of which the Nifty PCR also fell to levels of 1.51. And as we speak, I wouldn't be surprised if it has breached the 1.50 mark, whereas call writing continues on levels of 10,000, 10,100 and also 10,200. But on that note, let's shift focus to our options corner now, and let's move across and get option strategies from our guest. We've got Navneet, Daga and Amit, who are right here with us to give their option strategies. Navneet Daga has a call on Nifty calendar spread rather. Before we go to his strategy, let's take a look at what it actually means. A calendar is comprised of a short option in a near-term expiration cycle and a long option in a longer-term expiration cycle. Both options are of the same type and use the same strike price. Navneet, take us through it.
Well, the expectation and the strategy when we initiate the strategy is basically that you are expecting the time decay or the theta decay in the particular in the current month series, and at the same time you increase a Vega increase, that is a volatility increase in the next month options. So you normally initiate the strategy at the fag end of the expiry, so that the time decay in the option the current month is quite high. So I selected the 10,100 call options short straddle for the current month, and simultaneously I'm going long on the to protect the wings. I'm basically buying the next month option of 10,100 call and put options. The current spread is somewhere near to 158 to 160 where you enter, and I'm expecting the market to consolidate in 10,000 to 10,200 range, and largely I'm expecting the expiry somewhere very much near to 10,100 levels. So if that happens, we have a lot of time decay in the current month series, and my spread target is somewhere near to 220 points in this strategy, and 220 to 235 points in the strategy depending on when we expire. And I'll keep a strict stop loss if the spreads widens. If the market moves, if the delta move happens in the market, I'll keep a strict stop loss if the spreads widens towards 125 points. So in the strategy, I'm taking almost 35 points risk and having a target of almost 60 points in the strategy.
So, does that mean that in the near term you're expecting a little bit of correction till the expiry? So you sell the current month and buy the longer term?
Basically, I mean a lot of consolidation would be there for the next 5 days, and we'll be volatile between a band, but will not likely to break the band on the lower side. It's what I'm expecting.
So you're saying we will maintain that 10,000?
10,100 level is what I'm expecting the markets again likely to come back to.
So you're selling the September 10,100 straddle to eat the time decay,
right?
That is a premium, and you are buying the October 10,100 straddle. So that you can take, cognizance of the volatility that you may expect.
Exactly. So when you buy a next month option, you make sure that there is no overnight risk.
Right.
So because you sell an option at the current month, which is very less in the time decay.
Time value of money basically.
Basically, you want to protect yourself from the overnight cues. If there is a major gap down or gap up opening in the market, that would be protecting from the next month options.
Okay. So. Well, that's what Navneet's strategy is. He is initiating a nifty calendar spread. But Amit, I'm going to come to you on your strategy and specifically with options. How are you playing nifty when it comes to options?
See, the strategy is very simple. We are writing 10,000 put and 10,100 call options of near month series only. Now 4 or 5 sessions are left till expiry. I understand the fact because of rupee depreciation, volatility has started spotting, but I think it's an opportunity to ride the volatility again because very few sessions are left for expiry. And 10,000 put base is almost the second highest base after 9,900. And the total premium that we are getting in this strategy is somewhere around 70-75 rupees. So on the lower side, 10,930, and on the higher side, 10,170. So it's a good range for the coming sessions for this particular setup to be done. And overall, once we are after this week, so that means in the coming Monday, if market remains near these levels only, you will see that the premiums will decline, I think, by almost 10% from the current levels. In fact, more than that. Now, what good thing is the volume weighted average price of this particular series is above 10,000. That is, it is close to 10,030. So that means the major chunk of volumes in Nifty futures have happened near 10,030 levels. So that is why, despite all this adverse news flows, it is possible this particular series can settle near those levels or a little higher.
All right, so that's a nifty short straddle strategy by Amit. But Navneet also has a call on Bank Nifty short straddle. But before we look at his strategy, let me explain our viewers what exactly short straddle is. It is when one sells at the money calls and puts in anticipation of decrease in volatility. But when volatility decreases, followed by contraction in the options premium, and that's exactly the time when the strategy becomes profitable. Navneet, take us through it.
Well, if you look at the structure of the Bank Nifty, it was the one index which is not able to cross its previous peak of 25,200 levels. It is the first one index which has given us some kind of a sell signal. It has already corrected 500 points from the peak which is seen in the recent about 25,100 levels. So if I again look back into the volume weighted average price for Bank Nifty for the current month contract, it's somewhere near to 25,650. So what I'm doing is basically I'm trying to predict a market whereby it would be in a band of 350 points from the current levels. So I'm basically selling an options of near the money or at the money options of 24,600 levels. The currently just because the walls has spiked up in the market, the volatility index has spiked up, the Bank Nifty options volatility also spiked up. It's a good time to sell options, and I believe we are getting around somewhere near to 330 to 345 points. In this straddle, I'm expecting the market to be in the range of 24,200 to 24,800 in this current month contract. So eating up the time value would be the good strategy at this point of time rather than taking a directional bias. I'll keep a stop loss of 420 on the spread and expecting a target of 180 on the spread to narrow down. I'll close the strategy if we're moving near to that level.
Okay, so if I were to summarize the views of our guests for this expiry, that is the September end, from what I gather is that both of them are initiating short straddles to play for the expiry on the Nifty. And well, so there you have it, guys. We are expecting some amount of consolidation, but we're going to move on to our viewer queries. And our first caller is Shruti Jindal, who is calling us from Mumbai. Shruti, hi. Thanks for joining us. Tell us, what is your query?
Yeah, so I bought the 10,000 Nifty call at 58 yesterday, thinking that the market will go up today. But the premium has fallen down to 35. So should I book losses?
Amit, I'm going to come to you on this one. Shruti has bought the Nifty 10,100 call. Should she book losses or should she keep her position?
No, I think in today's up move, if any reversal comes, those positions should be squared off, because if you look at what happened yesterday exactly, 10,100 call added almost 10 lakh shares. That was majorly in the writing side. So beyond that, difficult for the market to move on immediate basis. And then today is Friday, and on Monday, I think these premiums will again come down because of time erosion. And second, despite yesterday's reversal in the market, rupee remained near 65. So that is one worry to me in the very short term period. And that is why I think on some reversal in the market, try to exit from 10,100 call options.
All right, Shruti, that's the view coming in on your position. Amit suggests that if there is any kind of reversal in today's trading session, you should book out because you bought the option at a premium of almost 58, which is now eroded because currently the premium is hovering anywhere about closer to 30 or 35 levels. But let's move on to our next caller of the day. Rohan Gupta is calling us from Goa. Hi, Rohan. Tell us what's your query on.
Hi. Actually, I had bought a lot of HCL September futures at rupees 850. So just wanted to know, should I hold on till expiry?
One lot of HCL September futures, and looks like HCL is bucking the trend in today's trading session. One of those few nifty constituents to be trading in the green. Navneet, what should he do?
Well, there's the signs that IT or HCL Tech, I would say that it's showing the signs of some kind of a bottoming out pattern, and the lower side we have got a lot of support at 860. So to my understanding, the stock which is showing the signs of revival in the falling market it's a good sign. I believe that there can be a chances of move towards 900 levels on the upper side. So I would recommend to hold on to this position, just keep on trailing on the stop loss on the high side. My stop loss level would be 865 on this trade. If one can hold on with that stop loss, one can wait for the target of 900 to be achieved on this stock.
All right, so that's the view on HCL Technologies and perhaps a little bit of indication on the information technology in general. But our viewers have also written to us on social media. And the first query comes from Praveen Kumar, who writes to us from Mumbai. And he is short on PVR futures at 1300. He wants to know if it is time to book profits. Amit, I'm going to come to you on this one. The futures of PVR currently trading at 1248. He's initiated his short at 1300. Should he book his profits?
This particular space has remained laggard. I mean, if you look at, there has not been any blockbuster on the cinema, so that is where the pressure is coming. And PVR, which was the outperformer continuously from the last 2 or 3 series, we are seeing that the shorts are being added in the stock. And in fact, when it reversed towards 1340, 1350, that time also those positions were added. I think it is slipping towards 1200. That is possibly the short-term support for the stock. So if somebody has bought at 1300, he can finally, if he has not exited so far, but another 40 points of downside or 40 or 50 rupees of downside if he is ready to take. So he can keep a stop there at 1200. That should be the final stop loss for this.
All right, Praveen has actually shorted the lot of PVR. So if I take Amit's view, he's suggesting that there could be more downside for the stock as it is trading with cuts of almost 2.5%, and he shorted around the levels of 1300. The PVR September futures are trading at about 1252, so he's very much in the money. But let's move on and take our next query for the day. That comes from Isha Sood, who's written to us from Tamil Nadu. Isha has bought Nifty 10,000 put at a premium of almost 50 rupees. She wants to know if she should book profits or markets can fall further from these levels as well. Navneet, she's in the money. Do you think she should hold on or just book profits, or she should wait till the expiry till next Thursday?
I would say that she can wait for the near the end of the day. If the market happens to break on the spot level 10,000, she can remain invested. She can remain invested in this trade and wait for the lower targets, because what I believe is basically still I have not seen any unwinding happening at 10,000 put options. There have been good amount of open interest still outstanding, and it's not looking likely that it's winding up in a hurry. So I'll wait for end of the day near to almost to around 2 o'clock. If market happens to break below 10,000, I'll carry forward this trade. If not, I'll exit the trade at a current market price somewhere near to 45 to 50 range. That looks to me a good strategy.
All right, so well, that's what you can do with your position on the Nifty. But you know, we're going to move on. And, before we wrap the show, we're also going to discuss some trading strategies from our experts themselves. And Navneet, I'm going to come to you on this one. You have a short call on one of the stock futures and a long call on another. Can you take us through those?
Look, I believe this market is more about understanding the positioning of the traders. So what I've observed in the last couple of days, there has been a tremendous amount of buying interest in the pharma stocks. If you look out the moves from the lows, likes of Lupin, Sun Pharma, Dr. Reddy's, all of them spurted because there was huge amount of shorts open interest out there, and they've seen unwinding.
Short covering rally,
right.
which we saw yesterday.
So one stock which came to my radar was likes of Ajanta Pharma, which has seen a good amount of open interest in yesterday's session on the long side, as well as some kind of a consolidation breakout on the high side on the charts. So I believe that still a lot more up move is possible in the stock. I have got a target price of somewhere near to 1320. One can initiate long futures at this point of time somewhere near to 1250 odd range. I'll keep a stop loss on the lower side of 1200 and trade for the target of 1320 on Ajanta Pharma. This is one long stock. The second stock that I have from the short future side is basically a Canara Bank. Look, the PSU Bank index has been struggling on the higher side, led by the larger one likes of SBI, which has been seen a chart breakdown as well. So one can look for creating short on the likes of Canara Bank, which has been struggling on the higher side in the range of 350 odd range. But currently the price has moved down. I would wait for initiating a short somewhere near to 340 odd range, and look for the target on the lower side of 328 and with a stop loss of 350 on the high side.
Right. So, well, we do have a short call on Canara Bank, but a long call on Ajanta Pharma, Navneet. Those are some of the strategies coming from Navneet.
All right. It's very rare to share the same name in the same studio. But nevertheless, before I go across to Amit with his trading strategies, just would like to highlight that the Nifty Pharma Index, which was so far outperforming, has also slipped into the red. So clearly, pharma stocks today have succumbed to that selling pressure in today's session. But Amit, coming to you, what are your strategies for the day?
See, yesterday there was a China downgrade by S&P, and that is why we have seen the commodity pack has come down. I mean, all the metals, they have come down. In fact, rubber also, if you observe the last a week or so, almost 10% of correction we have seen in rubber in the international markets. So I think it's a blessing in disguise for our tire stocks, which have already seen a positive rub-off from the government for the anti-dumping duty. And now with this decline in rubber prices in the international markets, there may be some pullback possible in the tire stocks. So Apollo Tyre, Balkrishna Industries, I think they are very, very precociously placed for a good up move from here. Now, particularly Balkrishna Industries, which has seen a good addition of positions. Now, it had seen a correction from 1700 to almost 1500 or 1400. Then it has reverted. I think on immediate basis, 1650 will remain a good support for the stock, and it is expected to move towards 1780 in the coming session. So one can initiate long positions in Balkrishna Industries from the auto ancillary pack. And another one is the low beta FMCG pack. Now, low beta FMCG, if you ask me, that is Nestle, Dabur, Colgate, these kind of stocks. Now, previously we were not seeing much buying happening there. So what was a basically mover was HUL and Britannia kind of stocks. But of late we have seen a good base formation coming in these stocks and good delivery buying coming in the cash market. Now, particularly Nestle, which has spent a very pretty longer period of consolidation, 66 to 68, that has been a range where very good delivery pickup we have seen on a very consistent basis. Once the stock has come down to 7100 or close to those levels, I think it's a buying opportunity again, looking at the risk reward. We are targeting 7800 on the higher side, and that is why it's better in this particular profit booking of the market to initiate long positions in this stock.
All right, so that's the view coming in for a lot of those companies. Of course, we're going to be keeping an eye on the tire stocks. And with that, we're going to thank our experts and joining us, taking us through some of those strategies, as well as solving a lot of those viewer queries. But of course, we do want to highlight that it is a very proud moment for us here at Bloomberg Quint. We have won the Best English News Business Website of the Year at DigiPub Awards, and would like to thank each and every one of you for choosing Bloomberg Quint. With that, it's a wrap on this edition of the F&O Show. Thanks for watching.